Hello everyone, and welcome to the channel. We've been told a very simple fairy tale. The European Union is a moral superpower, a center of the free world, a lighthouse of democracy that now bravely confronts Russia, stands up to China, and keeps pace with the United States. In reality, if you strip away the PR, Europe today looks much more like an overloaded client state being quietly pushed under the waterline by the very partners it worships, while paying the bill for a war, an energy shock, and a political crisis it cannot control. You see this not in speeches, but in numbers. Ukraine's budget gap alone is measured in tens of billions per year, and Brussels still pretends it can somehow cover this, rebuild Ukraine, rearm itself, decarbonize its economy, keep industry competitive, fund social systems, and defend the liberal order on top. Add your electricity bill, your rent, your taxes, and ask a simple question. Who do you think is really paying for this heroism? And this is where the official story starts to fall apart. The central contradiction is very basic. On paper, the EU behaves like a strategic subject. It issues declarations, sanctions, lines that must not be crossed. In the real system, Europe is treated more and more like an expendable buffer zone between major players, the US, Russia, and China. It imagines itself sitting at the main table. Structurally, it looks a lot closer to the menu. Here's the part economists quietly fear. This is not about one bad decision or one bad leader. It's about plumbing, about how power, money, energy, and security actually flow. For about 30 years, Europe's position was absurdly comfortable. Cheap Russian energy by pipeline, access to US security guarantees, a huge internal market, a strong euro, global trade routes wide open, and almost no serious security responsibility on its own territory. You could run massive welfare states, outsource hard power to Washington, lecture the rest of the planet about values, and still show steady GDP growth. It was the golden age of the parasite that convinced itself it was a brain. In short, the math didn't care about speeches. It worked because the system under it worked. Then the crisis, matryoshka, started. First, a health crisis that exposed how fragile supply chains and healthcare systems really were. Then, a geopolitical crisis in Ukraine that detonated directly on Europe's doorstep. On top of that, an energy shock because the entire EU model had been quietly built on cheap Russian oil and gas while pretending it was built on green transition and innovations. Then, a political crisis inside member states as voters were told to accept higher energy prices, more debt, and less security in the name of moral duty. From that moment on, Europe's illusions about itself began to collide with physics. Let's spell out the physical reality. Industry does not run on manifestos. It runs on predictable energy at a competitive price, skilled labor, capital, and market access. When you cut off a major chunk of your cheapest energy, replace it with imported LNG at higher and more volatile prices, and at the same time load companies with new regulatory overheads and ESG paperwork, you change their survival math. You can call it solidarity with Ukraine in the press conference. In the boardroom, it's called, do we move part of our production to the US or Asia? Here's the part no politician wants to explain on TV. It is entirely rational today for an energy-intensive European company to relocate where energy is cheaper, rules are simpler, and subsidies are larger. The Inflation Reduction Act in the US did not appear in a vacuum. It appeared exactly when Europe was busy blowing up its own energy bridge to the east and announcing that strategic autonomy will be achieved with more declarations and a few offshore wind parks. Structurally, this was never going to work. Now add security. The EU has spent decades building a bureaucratic empire in Brussels while keeping its own hard power deliberately weak and fragmented. Troop levels down, ammunition stocks low, decision-making slow, dependence on US command structures total. Then, the same EU suddenly starts behaving like a regional superpower, issuing threats, announcing long-term commitments to Ukraine, and promising to defend every inch of its territory. Here's where the theory hits a brick wall. The European Commission, in military terms, has exactly 0 divisions. What it has is a talking position inside an alliance still run by Washington and a patchwork of member states that don't agree on the scale, direction, or duration of this confrontation. Poland sees one war, Hungary another. Italy changed its tune the moment the real costs of rearmament and aid showed up in the budget. Finland is already quietly saying out loud that the fair peace Europe promised to Ukraine might not exist in this phase at all. So, let's take a breath. Where does this leave us so far? We have a union that behaves like a strategic subject, but structurally depends on the US for security, on global markets for energy, and on cheap labor for competitiveness, while picking a long confrontation with a nuclear neighbor and cutting off its own energy umbilical cord. Promises at the top, constraints at the bottom. And this brings us to the one element that changes the entire equation: incentives. The fashionable conspiracy version says there is a secret deal between Washington and Moscow. Let's put Europe back in its place. You don't even need a secret document. You just need to look at the structure. The US has no interest in a truly autonomous European power that might someday decide to chart its own course between Washington, Moscow, and Beijing. A Europe that buys cheap Russian gas, sells advanced machinery to China, and maintains large surpluses is not a loyal subordinate. It's a future competitor. Breaking the energy link with Russia, forcing Europe to switch to more expensive LNG, and pushing it into massive defense spending under US leadership solves three problems at once. It weakens a potential rival, strengthens US energy exports, and keeps NATO as the only security architecture on the continent. Officially, this is framed as support for democracy and defense of the rules-based order. In practice, it behaves very much like a subsidy pipeline into the US energy and defense sectors. Russia, on the other side, also has no interest in a strong, independent, strategically intelligent European Union parked on its western border. It wants a fragmented, dependent, fearful, and predictable neighbor, not a competitor, not a second US, a market, a buffer, and a bunch of states whose elites are busy with their own crises. A Europe torn between US pressure, its own internal divisions, and long-term dependency is much less dangerous than a Europe that knows what it wants. From that angle, you don't need a signed agreement to put Europe in its place. When both sides benefit from the same trajectory, the structure does the work. Here's the part economists quietly fear. In this game, the EU institutions themselves are not players. They are terrain, attractive terrain for bureaucrats, lobbyists, and second-tier politicians who have failed at home and want a second life in Brussels, but terrain nonetheless. If you're watching this from the Baltics or Central Europe, you feel this very clearly. For 30 years, the deal was simple. You surrender sovereignty, lawmaking, and key economic decisions upwards. You receive funds, protection, and political legitimacy downwards. You get to shout about values, wave flags, host battle groups, and in exchange you vote as told on big questions and apply the sanctions everyone has already decided. This worked as long as the system was growing and relatively stable. As long as cheap money kept flowing from the ECB, cheap energy from Russia, and security from the US. Once the crisis matryoshka started to close, the cost of that deal changed. Suddenly, being Europe means paying in higher energy bills, losing your young people to emigration, importing new cheap labor to keep low-margin sectors alive, and accepting the risk of being dragged into military escalation you don't control. From your corner of Europe, does this look like strategy or managed decline with better PR? Now look at how the EU actually behaves in this environment. On one side, it tries to confiscate or skim the returns on frozen Russian assets, counting on tens of billions in interest and financial engineering to cover Ukraine's budget and reconstruction. On the other side, it knows perfectly well that going too far here detonates its own reputation as a safe financial jurisdiction. Belgium, sitting on a large chunk of those assets via Euroclear, understands very clearly what happens if it sets the precedent that deposits can be arbitrarily raided whenever a political mood shifts. This is the part no politician wants to explain on TV. Once you break the illusion of legal safety around capital, it doesn't come back quickly. And Europe does not have spare decades to rebuild trust. At the same time, Ukraine's state finances depend year after year on external infusions measured in tens of billions. That money has to come from somewhere: US Congress, EU budgets, financial markets, frozen assets. When Washington signals fatigue or simply moves on to its own internal battles, Brussels discovers that its loud moral commitments translate into very quiet fiscal room. That's when you start hearing talk of budget holes, new instruments, extraordinary funds, and other polite synonyms for "we don't have the money, but we can't admit it." If you work in manufacturing or energy, you've seen this movie before. You know how it ends: cuts, shutdowns, consolidation, and someone eventually calling it necessary transformation. Now let's zoom out for a second. From a distance, the picture becomes even less comforting. You have an EU with shrinking relative weight in the global economy, aging demographics, chronic underinvestment in defense, overgrown bureaucracy, and deep internal divisions about almost everything that matters: sanctions, migration, energy, fiscal policy. You have a United States with its own crises: opioids, deindustrialized regions, political polarization, a huge and growing national debt. You have Russia, which has already adapted much more than Brussels expected to sanctions, reoriented flows to Asia, and continues to grind through a war that Europe promised would cripple it. You have China watching quietly, occasionally buying cheap resources and selling drones and electronics in the right directions. And in the middle of this, you have Brussels still speaking as if it is the central hub of rational governance on the planet. Here is where the story stops making sense. If you're sitting in Berlin, Paris, or Rome, you still have some leverage. You still have industrial base, population, financial depth. If you're sitting in Vilnius, Riga, Tallinn, or Chisinau, your margin is much thinner. You're deeply integrated into EU law, Eurozone or Euro-linked financial systems, NATO structures, value chains, and extremely dependent on external security guarantees and funds. This is the hook. The golden rope of integration is also a noose. Try to leave and you discover how deep the hook is embedded. Legal codes adapted to EU directives, agricultural policy shaped around CAP, financial systems tied to ECB decisions, youth raised on the idea that success equals leaving for Germany, Ireland, Scandinavia, industry hollowed out or never built because it was easier to import and consume with EU funds. You can exit on paper, but to rebuild a sovereign system, you must pass through a valley of pain, lower living standards, higher uncertainty, real political responsibility. Most political elites in these states have zero appetite for that. They have built their careers by managing dependence, not by building autonomy. You see the problem here, right? Meanwhile, Brussels itself has built a professional caste of people whose only real skill is Brussels. They revolve through the same positions: national politics, EU commissioner, MEP, back to some think tank, then back again. In one country they are center-right, in another, liberal, in a third, green. But structurally, they live off the same thing: the EU machinery. They set their own salaries, their own privileges, and they write the rules that shield them from real accountability. Changing party labels here is like repainting a rusted ship. It doesn't restore seaworthiness. From this angle, European democracy looks less like a vibrant system and more like a well-protected cartel of bureaucrats and contractors. This is the flaw you can't fix with PR. At the same time, Brussels is being increasingly cut out of real big power negotiations. The shape of post-conflict arrangements in Ukraine will not be decided by the European Parliament's resolutions. It will be decided in a narrow set of capitals: Washington, Moscow, Beijing, maybe a couple of others. The EU will get invited to sign the final communiques and pay for implementation. That's its unofficial role now: moral front office, financial back office, strategic spectator. From an angle no one shows you, this starts to look less like being at the center of history and more like being the designated paymaster and scapegoat. Now, what does this mean for ordinary people and small businesses? It means energy bills that remain structurally higher and more volatile than they needed to be because the cheap pipeline option was replaced by a more expensive and politically fragile LNG regime. It means taxes creeping up or services being cut because budget priorities shift to defense, aid, and debt service. It means deindustrialization in some regions, where factories can no longer compete under the current input prices and rules. It means more bureaucracy in daily life because the only thing Brussels can easily produce without permission from Washington or Moscow is more regulation. This is the moment a strategic pivot stops being an abstract PDF and becomes a line on your heating bill. In agriculture, especially in the Baltics and parts of Eastern Europe, it means an unpleasant test of resilience. Years of underinvestment, climate impacts, lack of credit, and poor planning can turn into food security issues much faster than urban elites imagine. When your fields are flooded or underproducing, you cannot feed a country with press releases and values. If you're in a region that doesn't fully feed itself and depends on imported food, fertilizers, and fuel, any further disruption quickly becomes a social issue, not just an economic one. At the financial level, the system is sitting on inflated asset markets and speculative bubbles that nobody wants to deflate voluntarily. It's not just property, it's also various derivatives, parts of the bond market, and yes, the still inflated cryptosphere. If that bubble pops in a disorderly way while Europe is still dealing with war costs, energy transition bills, and demographic decline, the combination will make 2008 look like a gentle rehearsal. If this actually surprises you, good. That's the part nobody else bothers to show. So where does this all point? Not to an immediate collapse tomorrow morning. Systems this large tend to degrade in stages, not explode overnight, but the trajectory is clear. More fragmentation inside the EU, more tension between Brussels and national capitals, more countries quietly refusing to sign up for new joint commitments on Ukraine or sanctions when they feel the pain at home. Already you have states that block or dilute decisions, others that openly say there will be no just peace as Brussels imagines it, and others that simply drag their feet. From here, all the options are bad. The only question is who pays first and who pretends it's inevitable progress. Households pay in prices, uncertainty, and reduced options. SMEs pay in regulations, reduced demand, and squeezed margins. Peripheral states pay in brain drain and permanent dependency. Core states pay in lost industry and political instability. The Commission pays in legitimacy but compensates itself with even more rhetoric. If you caught the hidden angle here, good. If not, the elites are already billing you anyway. Thank you for watching. Take care of yourselves and your loved ones, and try to remember, slogans don't power grids, systems do.